Thanks for tuning into the Trade Setup Bar by Grow. I'm Neeraj Shah, and it's Monday morning. And even Stevens, if you think of it, at least from a day trading perspective, let's take stock of the global roundup and the top newsmakers. Then, Asian Pacific markets are mixed. The Fed and the Bank of Japan decisions ahead this week. Essentially, the Fed decision is the one which matters the most, and I think everybody will be watching out for that. Interestingly, Prime Minister Modi has told Vladimir Putin that this is not an era of war. Hopefully, it gets over soon. Amongst other things, China's Chengdu is going to lift the lockdown of the whole city from today. Now, is it a change in policy which is very doubtful until the elections are over? Does it have a bearing on what crude prices do? Well, they've been on a bit of a softer patch in the last few days. Maybe this lifts the prices as well. Who knows? So let's wait and watch. US markets did wobbly or were wobbly in Friday's session, but like I said, the futures today are doing okay. The other cues, I think, are stable unless I'm very wrong. Dollar index at 109 odd, 10-year yield 3.4, 3.45 odd, risk assets flattish. So no big changes there. The SGX Nifty 2, I reckon, should be indicating a start which is flattish, 17 odd points. So hardly any movement there. So what's the trade setup there for? I mean, to my mind, I think markets are very unlikely to show any major upside, at least upside bias, till the Fed decision is out of the way. You never know, there could be downsides because we've rallied quite a bit already, right? Never mind the Friday's fall. So you could always see a bit of a corrective move, but I find it very difficult to digest that the markets will have a decisive move upwards at least until Wednesday is over. So until then, yes, bottom up trading ideas, etc. But market wide index trading ideas very difficult. Remember, last week was tough, especially Friday. Only 3% of the FNO names therefore ended the week on a positive note. Just shows you where or how the mood is currently. IT and real estate continue to remain under pressure. And I just thought that the appetite for Harsha Engineers, right? Subscription 74 times certainly shows the risk appetite for good paper or good stock. So that may well continue. Defense, for example, you never know. There's this whole talk of how the military has said that they want certain uh, defense companies, indigenous defense companies, to make an application to supply drones and some other things. So you might well have a bunch of these defense companies doing well today. You might well have, specific themes doing well, but in general, the market-wide mood may not necessarily be positive. FI sold, by the way, 3260 crores on Friday. So that is something to watch out for as well. This could probably be a largest number in a long time. So this is all not all that great. But amongst all of this, I thought the Nomura note summed up what everybody's been saying. So there's nothing new here. But I'm just saying it sums up what everybody's saying, that while India equity valuations do not appear particularly attractive, everybody says valuations are tough. Uh, Lack of adequate investment opportunities elsewhere in the region for now implies that foreign investors remain quite interested in India. Again, something that everybody says. And the last thing again that everybody says, the key risk to watch for India is whether oil prices surge higher in the months ahead. To be fair, viewers, I think this, in a sense, is the simplest summation of the India situation right now. Either of these three variables change. So if valuations become cheaper because earnings gallop or markets correct, then India becomes attractive. If the other investment options in the world remain inadequate, then India stays a favorite. Never mind the Friday's sell number. And if oil prices continue to remain benign, India stays a favorite. If oil prices move higher, then it's a problem for India. It is as simple as that to my mind. What are the in such a scenario? What are the stocks and the sectors to focus on? IT remains on a bit of a downtrend. So Nifty IT down 8% in the past week. You could argue that is it kind of making a bottom? Who knows? The last time it made a bit of a false bottom before the Goldman downgrade really shook the space. A short buildup has been seen in Infosys, which was down 9% with an OI up at 30%, or Coforge, again, OI up 10% in the last 5 days. LTTS and LTI are the other ones which closed below the 200-day moving average. And I was reading an Incred Equities note wherein they hosted Emphasis on a conference. And by the way, Emphasis had that Blackstone portfolio which gives it support. And still the commentary didn't appear necessarily gung-ho bullish. It was cautious. Uh, maybe with reason. So IT remains a sector in focus. Some stocks to watch. Ambuja Cement certainly remains a stock to watch. In Friday's AGM, the Adani Group has said that they will invest 20,000 crores in Ambuja via warrants at a price of 418.87 per warrant, much lower than the current market price, of course. Gautam Adani has been appointed chairman of Ambuja Cements in a board reshuffle. He's he's put out on Twitter, and let's bring up his tweet if we can. Um, yeah, he says that this makes them the second largest acquisition, second largest cement manufacturer, and they will double the capacity in the next 5 years. Well, it's as unequivocal as it could come in from the head honcho of the Adani Group, Mr. Gautam Adani, and therefore you presume that whether inorganic or organically, there is capex that is coming on stream out there. Maybe this 20,000 crores goes in for that. We still don't have clarity on that, and that's why two contrasting notes, and you can go with whichever note you find the arguments to be strong. So Citi as a sell, a target price of 340. They say the capital raise should help the group's stated target to double capacity over the next 5 years. Changes announced to the board and management, but they await further clarity on the company's inorganic or organic expansion plans and use of proceeds on the warrants issue. By the way, it's not just Citi. I think I was reading a note from Morgan. They are underweight ACC Ambuja as well. And there is I think a note from one more brokerage house, Goldman Sachs, has a sell and a target price of 380. Contrasting view on from MK on Ambuja ACC, they are saying that the September 23 price targets for ACC Ambuja are up by 33% and 47 to 2970 and 530 respectively. Clearly, they are more bullish. They retain the hold ratings given moderate upside and the fact that the stocks have run up since the deal announcement. Adani Group's acquisition, the re-rating of the EV/EBITDA valuations as well versus the last 5 years average. They upgrade the capacity forecast, as does everybody, and they bake in cost synergies as well as discontinuation of the royalty payments, which adds up to about 150 rupees per ton for ACC Ambuja respectively. So they're a lot more benign. Now, depending on which argument you find favor with, you can form your view on Ambuja and ACC. By the way, on Thursday, we'll do a conversation with Rakesh Arora, ex-Macquarie, currently with Go India Advisors, on cement cycles. That might also give you an idea, not just ACC Abuja, on all cement companies and whether cement is actually on the cusp of entering a virtuous cycle. It'll be an interesting conversation. You might want to tune in for that. Now, ONGC, Reliance Industries, Vedanta, the finance ministries reduced the windfall tax on domestically produced crude oil um, from to 10,500 from 13,300. So I think ONGC, maybe even Vedanta or Oil India, some of the others benefit. They've cut tax on export of diesel and ATF. Maybe Reliance Industries benefit. So watch out in case these stocks react. Adani Power has withdrawn the delisting offer. It said it's not received the in-principle approval from the exchanges, and or withdrawing the offer for delisting on account of the delay in commercial viability. So that's that. I mean, the stock has had a manic run up in the last few weeks. Sri Lanka Sugars, the expanded capacity for ethanol production from 720 KLPD to 1250 KLPD. Clearly, in time for the new sugar season, could be interesting. Sri Lanka. HDFC Life gets the NCLT approval for amalgamation of Exide Life Insurance into the company. So watch out for that. There's some AGMs today. Ramakrishna Forgings, Rolex Rings, and Sanghi should be interesting. A cement company which has been the buzzword for being acquired. Let's see what they say in the AGM. I haven't gotten too many notes on the logistics policy. So yeah, some companies have had run up in the run up to the announcement of the logistics policy. Let's see if some of these see a bit of a breather today. Some trading recommendations from ICICI Direct on Jubilant FoodWorks. They say that the delivery-based volume pickup was observed in recent days. The stock has managed to close above its sizable call base of 620 on a weekly basis. The future OI in the stock has largely remained stable, indicating fresh long positions may form in coming days. The immediate major support is at 600. So they're going long on Jubilant, or recommending going long, recommending going short on IRCTC. They say that the trading in a range of 700 to 730, but last week the future closed below the trading range. It violated a sizable put base and closed very much near its strike. They expect the stock to test 640 levels in the coming sessions. And lastly, viewers, before we wrap up, an interesting note on ethos. You don't normally see too many people talk about this one. Anybody who's flying and through airports would have seen in some airports the ethos luxury retail um, boutiques at the airports predominantly. MK initiates coverage with a buy rating in a target price of 1,400 rupees per share. The target multiple implies a 5 to 30% valuation discount versus other retail formats. So that's the key messaging. And remember, US at a price of 986, this 1,400 target implies a nearly a 40% upside. They're saying it's India's leading luxury watch retailer with a 15% market share in pan-India physical presence. They say India is on a cusp of an exponential growth in luxury watch sales, and they forecast an EBITDA CAGR of 47% for Ethos on a 30% revenue CAGR for FY22 to 25. If it shows those numbers, then it could be an interesting one to watch out for. So, do uh, it could be an interesting. We'll I think we'll do a story around this. So you can probably read what MK's logic is in a detailed story that will be there on BQ Prime sometime later in the day, in case this works for you. So that's the long and short of the trade setup. We'll be talking to Manishi Chaudhary. Actually, we'll be talking to a bunch of very important experts all through this week in the run up to the Fed decision. So Manishi Chaudhary today, he's head of Asia Pacific Equity Research at BNP Paribas. So watch out for that conversation today. You will also hear from Samit Vartak tomorrow on Alpha Mobiles. And of course, yours truly, I'll be traveling to Delhi for the JP Morgan India Investor Summit. And we'll bring you a bunch of very important conversations from there. So those will help you maybe take some trading or investment decisions as the case may be. Thanks so much for tuning in today, viewers. Have a safe day ahead and happy trading.